Business personal property tax. What is it? What qualifies as one? How much does it cost? When do you have to file it? Let's learn about that today. Hey everyone, this is Dan Ducan, and today we're going to talk about business personal property tax. So what is BPP tax? Essentially, it's a tax that's levied on you by the state, so not the federal government, by the state. There's a tax on all the assets that a business owns and uses for its business activities. So what are some examples? Things like computers, office equipment, desks, chairs, tables, software that you use to conduct business. All of those things are counted in this. So essentially, you have to pay taxes on these assets that you own to conduct business. If you work from home, things like your stove, fridge, things that are part of your home, those things don't count, so don't get too picky about that. When we first were sent a business personal property tax form, I had no idea what it was, so I started worrying about all the things that I had to include. But no, our first year, the only things we included on that list were things that were owned by our business, that were used by our business. So things like any software, editing software that we use for videography, my camera, my lighting equipment, my microphones. And then on the website end would be like hosting plans and whatnot. And for podcasting, honestly, the exact same things as the video. And so how much does this cost for us with all those things I mentioned? Our assets in our first year of business were less than, I want to say, $3,000. So when we sent in the tax form, along with the business license renewal, the payment for this tax altogether came up to only $22. So as you can see, it's not that huge of a deal. I think the math for my state, at least, is they multiply the value of your property, which you can include through the depreciation charge that you use, which you can include through the depreciation charts that you use. They multiply that by 10.5%, so it's a very minimal amount. Who pays this tax? It's really any business owner that has any assets that are owned by the business used for the business purposes. And I believe it's 38 out of the 50 states that require this. So check with your accountant, check with your local county to see if you need to pay this, how much do you need to pay. It always differs. Like in our state of South Carolina, I heard a lot of people say that you only count big assets, so things that are less than $200. Don't quote me on that. Ask your accountant. Disclaimer, as always, I'm not a financial advisor. I'm not an accountant, a tax guy, whatever. This is just educational, well, entertainment purposes, really. So please don't sue me. If you own no assets to carry out your business, first tell me how you do that. I'd love to know. But if you don't, truly you don't, you still need to file a document that certifies or that shows, that proves to the state government that you don't have any assets. That's it, guys. Let me know of any questions you might have in the comments below. I will try my best to answer them. And if you'd like to see more business advice like this or financial talks or even specific gear reviews, then please subscribe. We'll have more of these. So thank you for watching.